Now let me talk about how you can use the indicators in your day trading strategy development. These particular two indicators look into the average executed volume of orders being executed in the last minute, because we have a 1-minute chart in front of us. Knowing the average age of the orders, I'm using the term age for the lack of the better term, is important to detect profit taking and stop loss strategies of other participants. Well, you know that the average lifespan of an order on the marketplace is limited to a few seconds, even less than that. However, if we talk about profit taking or stop loss orders, their lifespan can be much longer than that, maybe a few hours. And when these orders are executed, it generates a certain spike in the indicator because the average age of these orders is extremely unusual. For example, here you can see there are spikes in the indicator, and the numbers on the right hand axis is milliseconds. So we have 300,000 millisecond order that was executed here at about 3 p.m. and here there was even 1,500,000 millisecond order that was executed here on the bottom. So this is something that happens very rarely. By very rarely, I mean several times a day. So it's a tradable event. You don't see it all the time. It's something that is very peculiar and that is very clear in terms of a signal, as opposed to a moving average that is very smooth and you don't know where to enter, where to exit. So how you can trade these signals? Well, what does it mean when a buy executed age indicator spikes? It means that a buy order has been executed that has been around for maybe hours, or maybe at least several dozen minutes. So if it spikes, it signals you that somebody placed an order to enter the market and has been waiting for that event to happen for hours, and now it finally happened. So this is pretty much a signal for the bottom, because an informed participant, informed meaning big enough to stand out among all the noise that you see on the chart, that participant actually predicted a bottom of the price, a local bottom, and decided to pull the trigger. The same applies to the sell executed age. Spike here at the bottom of the chart at around 2:25 p.m. means that a long-standing order to sell a stock was executed, which pretty much indicates there was a profit-taking order being executed. Somebody placed an order a while ago and to close his or her long position at the best price he thought he could get today. So this is a profit-taking order getting executed. And as such, if we assume that that was an informed participant, that should trigger a peak in the price. And as you can see, it pretty much corresponds to the actual price development. Again, this is a real-time chart. There is no way for me to know the future. It's Friday, February 12, 2010, and I'm showing you historical data that corresponds to the price movements and signals. So let me show you past history for today's day. So the day starts at 9:30, and we have here again a local bottom, because it's a buy order, at around 10 o'clock, and a local sell signal at about 10:10 a.m. this morning. Okay? You can actually short sell it as well. So if you were in the market at all times, opening long positions and opening short positions, when the trend reverses, this is what you would do. You would probably short sell it here and wait till this signal, and you would probably use this strong signal as an entry point, because again it's a bottom, since buy executed is at a strong peak, and wait all the way till you see the sell signal here, and we have another bottom signal here which was all the way till here, and so on. Please note that the problem with charts here at when you do visual analysis is that the indicator scale changes over time. So by just scrolling a few minutes back and forth, you see different scales, which can be misleading. So you should look at the absolute values, and for example, right now you can see that by moving just a few inches to the right, I'm getting a different scale, which can be misleading. This is actually noise, and this is not noise, and you see the strong bottom signal on the buy executed edge to the left, which is very strong related to everything else. So we would pretty much use this as an entry point, and exit here. Yeah, that should be about right. So we can look at other stocks. For example, we can look at Google and see if we can spot the same patterns there. Again, this is a strong entry signal that lasted for about 10 minutes. Well, let me start from the beginning of the session today. So this is a sell signal. This is actually buy signal, sell signal, this is another strong buy signal, and so on. We can take a look at other stocks as well, say Apple. The whole idea is to find stocks that are heavily traded and are pretty much volatile, so that you can make money by trading these local peaks and bottoms. Let me scroll all the way to the beginning of the page, and again, what we see here, by avoiding, let me pick the right scale here. Okay, peak on the sell side, so we short. This is the entry, so we can actually play it as a long position. That was a small sell signal. I don't know, maybe you should trade or should not trade. It depends on how sensitive a certain stock is, because these patterns will be different from stock to stock and from day to day. At some days there will be much more noise as opposed to spikes in the indicators. At certain days it would be more spikes than usual, and of course different stocks exhibit different behavior. So if it's an ETF, you will see much smoother patterns as opposed to regular Nasdaq traded stocks, such as, say, Apple, that we are currently looking at. So then again, here is the sell signal